What's up, folks? It's Eric from Option Edge, and today I want to show you a lesser known but extremely powerful option strategy known as the broken wing butterfly. This strategy backtests better than just about every single option strategy I've seen, and I've been employing the strategy a lot now, and I've been getting very good results. So today I wanted to share this strategy with you. So let me show you how to set it up. And right now, as you can see, I'm in the NVIDIA options chain, July 19th, the July monthlies. So another way of describing this strategy is a 1/3/2 ratio spread, otherwise known as a broken wing butterfly. And the reason why it's called a broken wing butterfly is when you see the P&L graph, it's going to look like a sort of like a one wing butterfly. So let's get into it. So I have my option chain here. The way this works is we're gonna select a 37 delta put, a 25 delta put, and a 10 delta put. So we're gonna start off by buying a 37 delta put. So if we look at the 123 strike, that's gonna be closest to 37. So I'm gonna select that one. Now we're gonna sell a 25 delta put. So that one's too low, that's 21. This is 24. We're gonna go with the 119 strike, which is closest to 25 delta. Next, we want to buy a 10 delta put. So here we go, 113 is right around 10 delta, okay? So now we're gonna go into the, we're gonna customize it because we have different numbers for each of these different strikes. So basically, just a quick description. What we're doing here is basically we're selling two 25 10 delta put credit spreads. So if you look at 119 and 113, we're going to sell two of these, okay? And then think of 123, we haven't touched it yet. So just two put credit spreads that consist of a short 119 strike and buying behind it the 113 strike. All right, now we're going to add a little complexity to this. We're going to then buy a single 123 put, and then we're going to sell another 119 put to create a debit spread, a put debit spread. So what's happening is we are selling two put credit spreads, and then we're buying one put debit spread to create this broken wing butterfly. A regular butterfly would have this sort of triangular shape in the middle with a wing to the right and a wing to the left. What's cool about this strategy is that basically there is no upside risk if we look at the P&L graph. So as long as the stock either stays where it's currently at, the stock's trading at 125. So if it stays where it's at, we're good. If it moves down a little bit, we're good. If it moves down a lot, we're still good. In fact, if it moves down even more, it's even better. Our break-even point is going to be right around 116. If the strategy, if the stock moves down a lot, our max profit is $480. Okay, which obviously is the odds of that happening, pinning your short strike are low, but if they do happen, you can make a lot of money. And even if it moves beyond that, you can still make even more money. So basically, what's happening is your put debit spread is becoming in the money, and then you're getting the full credit of your 25 delta short put if it pins that 119 strike perfectly. And if it moves down, that your long put debit spread covers a lot of your loss. So that's why you still can make some money. But then as it goes down to 116-ish, that's when you start to lose money. So it will require the stock to go down 7%. And if you look, NVIDIA dropped over 2%. So I like to do this strategy on days where there's some major selling. So let's go over to Trade Machine and see if we can find a strategy where NVIDIA drops and see if selling a broken wing butterfly spread is profitable. All right, so before we go into the back testing software, I'm just going to look at the chart of NVIDIA. So what I like to do is when I'm trying to get bullish on a stock, one of my criteria is I want to see a stock that is above the 200-day moving average, this red line, and also above its 50-day moving average. And then in addition to that, I want to see the 50-day moving average above the 200-day moving average. Just means that we're in an uptrend. So that's one thing I like to see. And then I've back tested many times an oscillator, specifically the MACD oscillator, And basically for this strategy to work best, you actually want you want the MACD, you want the fast line to be above the slow line. And basically what that means is a lot of the once the fast line has crossed over the so with the MACD pointing down like this is with the fast over the slow, some of that downward momentum has already occurred, and you can see, we were at a high of 140, and now we're down to 125. So some of the downward momentum has occurred in the stock. Could there be more downside? Yes, there could be, but some of that more, I guess, violent downside move is sort of taken out, and that's what this MACD oscillator tells me. So let me show you this trade I constructed. So the first thing is this kurtosis, which is a proprietary AI indicator, which basically means that the stock has higher up moves than down moves, and they're more frequent. And then we have the stock. We want our stock to be over the 50-day moving average, the stock to be over the 200-day moving average, and then meanwhile we want the 50 over the 200-day. And then we got our MACD oscillator. We have the fast below the slow, and then last but not least, we want to see on the day if the stock moves down 2% or more, we're going to open up this trade. And the idea is that the idea is that some of the downside move has been taken out of this stock, and the likelihood of it to move about 5% or more, which is our break even's about like at the 7% mark, is about 5% away from where our short strike is. So the idea is, some of that downside momentum has already been taken out. So let's hit save and see how the backtest does. This is a 14-day strategy. I have entered in our 1x3x2 broken butterfly strategy. So it's 37 delta, one of those only long, 3 short, 25 deltas, 2 long, 10 deltas. And you can see that over the last 3 years, from 2021 to last day the market was open, you can see the last 3 years that this strategy was very strong, almost 1,000% return. And I hope this might seem like there's a lot of technicals here, but in reality, I really just don't think it is. We're controlling for an up market. We have this AI component, which is like a cool proprietary thing. We added the oscillator, and then we just want to see what happens when the stock moves 2% or more. We can change this to 1% to see what type of returns we get if it's just 1%, which happens more often than 2%. And we'll see what happens here. And all right, you can see even a 1% move has pretty good returns, not quite as good returns though as 2%. And we're closing this trade out at an 80% or more gain. So that's the breakdown of the strategy, and I think it's a very strong strategy. And yeah,